To trading session number 11 Tuesday morning. We are going to be diving into CPI data, the CPI report. We have an article that we brought up here we're going to share in a minute. Right now we're going to be looking at our 6-month 4-hour chart here. It looks pretty healthy still to me for a lot of labor news that has come out, and also the CPI report today. You can see it came out, and you can see in the pre-market it was diving down, and right around here it decided to recover, make a reversal, and now you see the 50-day crossing here, and then you consistently see higher highs right here for all the day traders out there. They really caught that reversal if you were at the bottom here waiting for that opportunity, and you see the 50-day cross there. That is a signal to get in right there. So that is the 1 minute 1 day chart reaction, stock market reaction to the CPI data coming out today. All right guys, so let's dive into the CPI data, the CPI report news here that just came out. So CNBC, we have inflation slowed to a 3.1% annual rate in November. So that is what it's at right now currently in November data. You can see prices across the board range from goods and services edging higher in November, but mostly in line with expectations, and it's furthering pressure on the Federal Reserve to try and give us an idea if they're gonna cut rates sooner than next year, sooner than May. Tomorrow's their last meeting of the year. We're gonna see Jerome Powell speak and see what he says about cutting rates, and because I think they're gonna aggressively cut rates next year, depending. Inflation is coming down. I think they have a 2% goal. They want to see inflation at 2% before they start. So, right now 3.1 is good. We need it to come down a little bit more. So consumer price index, a closely watched inflation gauge, increased 0.1 in November. It was up 3.1 from a year ago. Economists surveyed by Dow Jones had been looking for no gain and yearly rate of 3.1. Monthly rate indicated a pickup from the flat CPI reading in October. The annual rate showed another decline after hitting 3.2 last month in October. So it's at 3.1. It was at 3.2% last month, and you can see here. So you can see U.S. Consumer Price Index year-over-year percent change as of November 2023. The source is the U.S. Bureau of Labor Statistics. You can see back in 2021, January, you see it just spike up, and it got to a high of around 9%, and that was June 2022. And then you just see it falling like a knife here. It got down to 3% in June, raised a little bit back up in August up September, and now we're hopefully coming back down, hopefully breaking that 2% area. Hopefully we're getting to 2% soon next month as well. So that is something to look out for. You could read on this article what exactly is happening with the prices. You could see 2.3 decrease in energy prices helped keep inflation in check. You see gasoline fell 6% and fuel oil was off 2.7. Food prices increased 0.2. We got energy obviously down 5.4. As you saw last week, it was oil lows. We were buying oil last week at ExxonMobil, and we got a bunch of other stuff here, quote unquote, from Lisa Sturdivant. Falling inflation does not mean that prices are falling. In fact, prices for just about everything are still higher than they were before the pandemic. And housing costs in particular are weighing on many individuals and families. So, it's still a concern, but, it's easier than what it was, a year ago. We also have, used vehicle prices increasing 1.6%. We have insurance increasing 1%. Medical costs also are increasing 0.6. Right here, after hiking rates 11 times since March 2022, policymakers are expected to signal that the policy tightening is over. So we're hoping Jerome Powell comes in tomorrow and just halts, because he's definitely not going to cut rates tomorrow. But hopefully he just comes in and halts it. All this data is looking great for him to just halt and not do anything, not do a hike or anything. So that's what we're hoping for tomorrow. It's leaning towards that, unless something surprisingly happens and he decides to cut, or he could even raise, but I don't think he's going to. So following the release, futures pricing continued to indicate virtually no chance of any further rate increases. So there you go, with the first cut likely to happen in May, guys. So we're hoping it's before that, but it's really gonna come down to a lot of other factors. We're hoping inflation comes down to 2%, and the labor costs and everything, labor data stays where it's at, and even better than where it's at. So and there's a lot more other stuff to take into consideration as well. So we got the SPY up. Mentioned earlier that it is looking pretty healthy. Let's look for deals. We have the total account value at $6,317, and with our cash balance at $3,177, market at $3,140. So that is the account we really want to keep a high cash position, just because we don't know what the market's going to do here. So the Fed is really a deciding factor of what people are going to do tomorrow in the stock market. So we want to keep a high cash position, at least 30% of the portfolio, but we're doing half right now, and we could unload some more as soon as we know that the Fed is going to cut rates, and we feel comfortable putting more money in the market right now. But just in case, this could really come back down towards the 200-day on reaction to the Fed and stuff like that. So we don't know what it's going to do. No one knows what the stock market is going to do in the future, but we have an idea where it's going to go. And if it does sell off, we will be prepared. And if it doesn't, then we have money in the market, and we'll just keep trying to buy deals at a cheaper price than when we have them. And so let's dive in. So here is our watch list. Here are the 30 stocks we invest in Muggle Fellows. So we have, looks like Airbnb being the worst one in the portfolio right now. And that's not our position, guys. That's the stock in general being the worst one. A lot of people are confusing that. Over here is our position. So when I'm over here, I'm talking about the general stock. Over here, I'm talking about our positions. So right over here, Airbnb being the worst performing stock. And that's down 2%, pretty much 1.99. We have ExxonMobil oil still trading at lows here. And what we look for is the RSI, and RSI is a relative strength index, taking in consideration if the stock is overbought or oversold. We are looking for oversold values, and we trim typically in overbought values. So ExxonMobil, 29, that is below 30, what we look for on the RSI, and it's trading, if you saw, if it's trading below the 200-day, we also look for that as well. But mainly the RSI. We got Palantir at 39, and that's trading below the RSI. That could be a play. We have Zoom. We have 52. Tesla we have at 41. Shopify at 53. Disney 37. PayPal 52. Google 47. Johnson & Johnson we got it at 35. That could be a play. All right, guys. So it looks like we're gonna load up again on Exxon Mobil here. Oil is trading at a low, and we saw that with the CPI, with oil coming down, and we're gonna, dive into that. So we're gonna go oil again here. All right, Exxon Mobil buy. We have amount $10. We got order type, market, time and force day, extended hours no, and order quantity 0.10235. Let's lock that in. All right, we bought it at 97.68. So you can see over here. Let's go take a look at that. All right, where are we on oil here? Here we are right here. So we have it at now a 58 market value. We have average price at 112, and then we have it's trading at 97, so it was trading below our average price. So we pretty much lowered average price a tad bit. All right, guys. So I don't think we want to trim today. Let's just double check here. We typically look at our high positions, and we want to trim them at pretty much the 70 RSI indicator. Let's see. Yeah, so it doesn't look like we're going to be trimming today. We made 2 trims so far in the portfolio. We trimmed Tesla a while back, a couple of weeks ago, and then last week we trimmed Airbnb, with our Airbnb being still our bottom stock. It was trading at negative 2%. We want it to really come down more before we buy. It's at 55 now. It looks like we sold at the top there. So now it's coming back down. So we need to, wait until it creates an opportunity for us to keep buying into Airbnb. We did buy a lot of Walmart. Let's see what Walmart is doing here. If we could find it, there it is. And it is still, below that 200-day moving average. It hasn't even passed the 50-day. So, we could put more into that. It's presenting opportunities. But today we went with oil. So we went with Exxon Mobil because RSI, look at that, guys. It's not even, it's at 29 RSI right now, and it's making no signs of a recovery. So we could probably continue just loading up on oil as well. So that is trading session for today. I hope you guys have a wonderful day. CPI report came in as expected today, and giving the Fed a more data to process for tomorrow's decision. And my prediction is they're just going to halt rates and they're not going to hike or cut. So that is our prediction. I hope you guys have a wonderful day. Hit the outro.